Well, I'm here now. Sorry. I know we put a message that said it would be at 6, but I'm here. I'm here now. Sorry. I know we put a message that said it would be at. Hey. I'm back. I'm here. See if I can turn us on some lights. Oop, let there be light. Let there be light. Let me send a message out. I am on. I'm on. I am on. There we go. Okay. Let's see what we got going. I'm live in living color. Let me put this up so I can see on the other screen, so I can see all the people and the places. Hello, everyone. Howdy. 3 people on. Y'all come on back. Come on in the room. Come on in the room. Come on in the room. Jesus is my doctor. Writes out all my scriptures. Come on in the room. There we go. Hey, y'all. Let me get my folks over here. Give me a minute. Let me get all the places. Everybody to know we on. I'm on a little bit late because I was coming home from fighting the Christmas shopping crew. It's what we've been doing at the grocery store. Anytime you're in the grocery store on Christmas Eve, then you get what you get. We decided to brave Walmart. Y'all already know how that went. We decided to brave Walmart today. The lines were snaking through the aisles, trying to get where we was going. Thank you, honey. All righty. So I did want us to talk a little bit about last week and what's coming up for this week. Let's talk a little bit about last week and what's coming up for this week. Let me find us get us a place.
Come on back out, my car.
Warren, please close my door. Thank you.
Close my door.
Okay, here we go. Let's go up here. Because I'm just coming in. I don't have my situation all set up, as they say, set up the way I want it to be set up. I'm having to, hey, Miss Deborah, I know you was here at 5 o'clock wondering, where is she? I'm here, honey. I'm here. We were trying to get in here. And I was like, I got to run in. I'm going on live at 5, even though it's 5:12. I'm going live at 5:12. That's what we're doing. I'm going live at 5:12. Okay, I'm going to present. We're going to share this screen over here. And I can move this off because now it'll be into me. All right, let's talk about what last week had to hold for us. Right? If we're looking at SPX from last week, now, one thing we ran into last week, have mercy, was we were running Monday, Tuesday, running up. We jamming. Yes, Monday, Tuesday doing its thing. Next thing we know, Wednesday. This right here is Wednesday. Now, this is what's interesting is those of you who were on with me on Wednesday, I do Wednesday live at 2 o'clock. And those of you that were on with me on Wednesday, we were talking while this was starting to drop. The bottom was starting to fall off. It's Deborah, you're sweet. Jeremy, hello, everyone. It's my first time, but I've been watching your videos. Wonderful, Jeremiah. Welcome to the E2T crew. So we were on the conversation. This is Wednesday, this big red candle right here. And we were talking at 2 o'clock on Wednesday. And all the while we were talking, the market was starting to drop, dump, whatever you want to call it. You will hear people say that the market goes, that it climbs the stairs going up, but it takes the elevator going down. Basically means it goes up a lot slower than it seems to go down. See how we got stair, step, stair, step, stair, step, jump off the balcony, end up in the pool, and then the next day it did come back up again. But this is what happened last week. These 5 days are last week, right? And then I'm going to go into Wednesday, though. I'm going to go into maybe a shorter time frame. Let's look at the 30-minute candles, and I'm going to take us into just Wednesday, which would have been back here the 21st is Wednesday, 20th was Wednesday, the 20th, right? Because Thursday was the 21st. This is Wednesday. So we started off the day kind of going, pretty much doing nothing. This is our opening candle, went up just a little bit. It's 12:30 right here. This is a 30-minute chart, which means every candle is 30 minutes worth of data, right? So we climbed up just a taste. We went basically from 47.64 up to 47.77, which is like, 13 points? It went up about 13 points and then decided it had enough and started. So while we were on our call, this was 1:30, we were on our call at this candle right here. We were on the call during this candle right here. And literally while we were talking, it was just dumping. I think we got off the call maybe at 2:40, 2:35, 2:40, something like this. But this had happened while we were talking. And then we ended up down here. So now, if you were on with us last week, we're doing, we're doing the Christmas credit spreads challenge. And credit spreads basically they work decent in volatility. The whole point is you get where you're, outside of the support and resistance areas. And for some of us, on Wednesday, price fell down and came into and through some of our trades and some of our strikes. So that can kind of make you a little nervous. Like, well, no, what am I supposed to do? And then, but what happened is, if you see here, after this is Wednesday. Now, everything, the market did, I'm looking at SPX, but of course, SPX is made up of all kinds of things. So several stocks did just what SPX did. And basically the next day you had a gap up opening, right? Then it fell off just a taste, and then it went up some more and up some more. So by the time the week was over, said and done, the trades that we were in from Sunday, because many of us got into trades on Monday based on last Sunday's call, and our trades by the time we got to Thursday, Friday, were ready to be closed. Because remember, when you're working with credit spreads, you're working with two things. You're working with time decay and you're working with price movement. So if the price is, let's say you have put credit spreads under here, price may fall into that, but we still had 2 more days, right? And the problem, the trade isn't bad until you're at expiration. So 2 more days, when you got 2 more days for the price to recover, which it did, and price climbing up some more, your premiums are decaying because of time. Decay is kind of chomping at theta, it's chomping at them, but you also have price moving away from your strikes. So by the time we got to Thursday and Friday, all of our trades were in good shape. The only ones, like I had my trades, all credit spreads all worked out good last week. The only one that I had to close early was my Affirm trade, which the Affirm trade, I would say it was my fault. It was my fault because I had Affirm earlier in the week as a call credit spread, but then I had Affirm as a put credit spread, believing that price would go up. Because Affirm was, Walmart kicked in and people could do the buy now, pay later at the cash register at Walmart. So I knew Affirm is somebody who gives credit in these times. So like Amazon credit, you're going to see Affirm is lined in for that. And when they started doing the Walmart, I kind of felt like they were going to go up. So on Wednesday afternoon, I think it was, I got into an Affirm trade. This was before I realized all this was it Wednesday? It might have been Thursday. Yep, it was Thursday. Thursday, I actually thought it was going to stay down far enough that I put on a call credit spread on Thursday at the 50.51, and on Friday it went up into that strike. It went up into the 50.51. It got me a little nervous because now we're on the last day, so got a little bit nervous. It went up. The high of Friday was $50.19. This was the high of this Friday candle. You can tell up here, this lets you know up here where these open, high, low, you can see my mouse up here. That tells you what the high. So the high of this candle was $50.19. Well, my strike was 50 call credit spread. So once you pass 50, my 50 and some change, my trade was breached. So I ended up closing it early and not, wanting to fool up with. It turned out the price closed at 49.06. So I really could have, I think it was 49.06. Yeah, it closed at 49.06. So my trade would have been fine. I closed it earlier in the day because I knew I was going to be going out and I wasn't going to be able to continue to watch it. So I just turned off the trade. If I had waited, it would have come back and recovered into price, and my trade would have been, I would have kept the entire $19. I ended up only losing $11 because I closed it when it was worth $30. I had taken in 19. I bought it back for $30. So I ended up with a negative $11, which, was fine because sometimes for your peace of mind, you close off the trades for your peace of mind. Yep. So, hey, Jeremiah's here. Glad to be here. Good to see you. Tamar, hey, honey. And Lady T, hi there. So that's what the trade was with the firm. All of the other trades that I had from last week, they ended up being fine. I had Mara, SOXL, and Carvana, and a firm I had TQQQ, Riot, Unity. My Unity trade opened and closed really quick. Neo, my Unity I had in Peakbot. Y'all remember we talked about Peakbot last week, where you can let Peakbot do your automated trading, right? Peakbot can do your automated trading. Basically, it does put credit spreads for you, and I picked Unity. I entered that trade on Monday. It closed on Tuesday. It was ready to close on Tuesday. Usually I give like 80-85%, and then I close them up. So I did Unity, and that was the only one I did last week, I think, with Peakbot. Oh, I had Amazon also. No, I had an Amazon call that when this whole thing dropped on Wednesday, my Amazon call dropped too. I generally did, last week, just my last week thing, I needed to remember and remind myself yet again that I'm a seller, I'm not a buyer. So I had bought an Amazon call on Wednesday, and then the bottom dropped out. So the call money I spent on Amazon basically ended up, the trade, it doesn't expire till next week, so it could recover some, but I just need to, stick to the rivers and the lakes that I'm used to. I need to be like TLC and stick to selling, because that's what I do best. All of my selling trades worked out fine. Well, overall, I was green there. The money that I did lose last week, I lost on the bought trades, which, nothing against buying options. I just know it ain't for me. It ain't for me. That ain't my strong place. My strong place is in selling. So I need to stay. You need to stay in your strength with an F. Stay in your strength. Yeah, that's what I needed to do, was do just that. So that's what I did. That's what I will be doing subsequent weeks. I will be staying in my strength. Let me see. We got Forex Factory / calendar. Let's see what we got for next week coming up. Now, you'll know where the market is closed on Monday. Obviously, it's Christmas, so the market will be closed on Christmas. This is the week's, as meetings. Not a whole lot is happening here as far as meetings go next week. So December 24th, which the 25th is a bank holiday and the market holiday and everything else. Probably going to be low volume this week. Low volume because all the stuff and people who would be trading are, maybe getting the week off between Christmas and New Year's. This is maybe people are spending their bonus money, those who are in those spaces, and they're not going to be maybe running their desks as tightly, as closely as the rest of the year. So the volume, you can expect low volume, right? Not saying the market won't do what it do, because it probably will, but it won't be a whole lot happening. Okay. This is the last week of the year though. This is the last week of the year. Tuesday, we got HPI month over month. Let's see what HPI even stands for. House price index is HPI. We care because it's a leading indicator of the housing industry's health because rising house prices attract investors and spur industry activity. That's definitely happened. Anybody who's looked at houses or looked at selling or buying a house know that the prices right now are a lot. It's a lot going on. And with the interest rate even being up, which is kind of weird. You think with the interest rates going up, why would people be? But I guess, as I said, investors get attracted to what's going on. They just had to put their money in hard real estate versus other things. S&P CS Composite, HPI year over year. That's all Tuesday, but those are both yellow folders, so not a lot of volatility. Wednesday, we've got the Richmond Manufacturing Index, which is an orange folder. Thursday, we've got unemployment claims, goods trade balance, preliminary wholesale inventories, pending home sales, orange folder, natural gas storage, crude oil inventories. Those are all Thursday. A lot happening Thursday. None of those are red. And then Friday, we've got the Chicago PMI is on Friday. All right. So, I mean, there's two things, something you can think about. If you're one who wants to, take a chill pill wheel and decide you want to chill out too, it may not be a bad time. It's all in what you want to do. Chill out, see what's going on. I was looking to see if there was any earnings coming up next week. I'm not sure that we'll have any earnings next week, but let me do a quick search as such to see what EPS Whispers has to say. Come on, do we have any earnings for the week? May not have any. Oh, not a soul though. Y'all need to see what it looks like. I need to show you what it looks like. Just so you can see. I won't call this petty, but this is kind of petty. How about earnings whispers really could have just put a thing up here and said no earnings this week, but they gave us an empty chart. It's like the empty tomb of Jesus. You're looking for the living amongst the dead. He is not here. He has arisen. Okay, so Tamara says she's not a fan of trading the last week of the year, but for Christmas challenge sake, I'll hop on one trade. You know what? I want everybody to always, always, always do what works best for your trading plan. Maybe do one trade. If you want to do one in your sim, you want to do none. You want to, it's really on you. We are going to wrap up our challenge, our credit spreads challenge this week. I want you all, if you're in the credit spreads challenge, to be sure to, take a good inventory of the trades that you did on the challenge. If you're using the spreadsheet, make sure you go and you fill it in and put the stuff there, because we have a spreadsheet where we're capturing all the information from the credit spread challenge. And you keep up. I want you to see, this is the thing, I want you to see how you did with credit spreads for the month. I want you to see how credit spreads has worked for you or not. I mean, I've watched and talked to the people who are in our credit spreads challenge Telegram group, and it seems like it's working out. It's working it out for me. Yes, we have to be working out for everyone. Now, if the credit spreads challenge is not working out for you, I definitely want you to reach out to me so we can talk about maybe what happened in the middle of the credit spreads challenge. Was there some area maybe you were missing a link or something, and we want to get that fixed. Okay, we definitely want to get that fixed. Let me look for something real quick. Listen, there's one thing I've seen is, and I had somebody in a YouTube video, which YouTube is a place where we can grab nice and good information. And the person was thank you for finally doing that. And the person was asking lots of specific questions about covered calls, and I will answer almost all the questions inside my YouTube group. I answer inside of my YouTube page, the YouTube channel. I answer almost all those questions. It was like going deeper. Finally, I had to pause and say, here's the link to the course that goes. Here's a link to the course that goes with covered calls, because the questions you're asking me are very specific questions, and I believe they can all be answered in a training. And I wasn't even saying that trying to be funny, because I had answered probably 3 or 4 questions from the person already. So I wasn't trying to be funny, but I was really saying that sometimes when you really have specific things and questions that you're looking for, and if you're not finding that in a YouTube video, and sometimes you may not, you may have to hunt though. This is the thing about when you're looking for stuff on YouTube, you hunt and peck, and then you find yourself down a rabbit hole, and you haven't even found out what you were looking for. Right? Because it may be some specific question that you just need to ask. And sometimes just seeing the going through the steps in the training is what helps you, right? I put together a training, and y'all know I'm an educator, so it's very strategic and very, step by step. All the things are here. All the questions that people would have are being answered. If you're working credit spreads and you're running into some kind of spot where you just really got a question, and it's a specific one or something that may be general, you just need to get a better understanding, go and check out the training. Okay, go check out the training. You're going to get what you need. And I promise you, the training is going to return for you in spades. We can talk about the money we've made on credit spreads just this month. And I believe, even though we've done only one contract per week, people have done more contracts. So, basically you've got, you can do a training. You're going to generate and get your money back over a short period of time. And then you can use that training and that information to go forward. Righty? Coolly. All right. Y'all hold on for a minute. Makai, in the closet, in the hallway, at the top, there's some books. If you want to get a book. Okay. All righty. So that's what I was talking about. If you want some specific training on credit spreads, then here we go. All right. You can get what you need right there. We looked at earnings. Let's go look. I had some ideas from trade ideas. I need to put it into a format where we can see it, and I will do just that. But let's go. I will do that, and I will publish. We'll publish our list of goodies for this week. But we seem to be having good results. I'm gonna show y'all with them. I'm gonna type up the list I have here, so that way we can maybe have a list. We'll walk through a lot of these, or several of these. I won't say a lot of them. We'll walk through several of these, and then we can let me get us a blank document. And then we can supports and resistances and such. Thank you, Adrian. Adrian said, Arlissa's training is very good and easy to follow. Yeah, I really try to keep it where it's, I know I learn stuff step by step. I do, right? And as an educator, that's, it's the way we want stuff to be. Did you find it? Okay. You got the crayons or the pencil? Okay. Well, you're going to probably need that or a pencil. All right, team. Where was I? I was here. Share screen yet again. Okay, let's go look at some. I had some call credit spread. Now I go to bar chart. I go to barchart.com. It's a free place to go. I go to bar chart and I look on the call credit spread list and I look on the put credit spread list. Let me turn this into, there we go. LVS, XOM, Pfizer, Google, NVIDIA is on the call credit spread list, which is interesting because it hasn't been up till now, has not been able to bump across that 500, the 500 mark. Not saying that it won't, it just hasn't so far. This is the call credit spread list. I'm going to put it into, my normal little nice, y'all know I do my little nice graphic. I told y'all I've been out all day. So here we got put credit spreads. Let's see who we have here. We're looking at the list. So y'all, if you see something that you're interested in us looking at, you're going to have to speak up. So that way I can look at it and we can see what we want to see there. Let me see. I got Rivian BAC. Apple is on the put credit spread list. Google also over there. Google could be. We did Google. We did a iron condor on Google the other day, and last week or week before last. I think it was week before last. We did Google, and then that turned out to be good. A firm could be over here. Put credit spread. Like I said, the put credit spread list is long. It's because stuff trying to go up. Snap and INTC. Okay, nope. Snap and INTC. Okay, y'all see the list? Let's see what we got. I want y'all to look at it and see if there's something that's catching your attention so we can go and take a look at it. I need this to be in like columns or something, but I'm liable to try to put it in columns and not be able to. Oh, nope. What we see? Anybody see anything of interest? I see Mara, PCS. Oh, Lord. How about we change that? Boop. How about we go off? There we go. Go off. You can leave it open. Here we go. Let's put it on the screen where we can seize it. Did you find them? The crayons and the pencils? I thought there was some colored pencils up there where the books were. No? I was pretty sure I bought all of it together. Present. Okay, screen 2, back where we were. Here we go. Can y'all see that? Make sure everybody can see it. Just a little bit. Just a little bit. LVS. I don't even trying to think of who they even were. I think we looked at them last week. Okay, so we're going to look at Mara. We're going to look at Google. What else we want to look at? Oh, come on now. Stay on the wrong thing. Where is my mouse? Oh, there it is. This is our list. Y'all got any No, none of the ones. Okay, let's start with Mara. I'll swing back to it. Are y'all looking at the list? Anybody none of interest? Y'all just hanging out, huh? Seeing what we see. Let me change this to smaller so we can see. Well, we can see what's over here. Get as much real estate as possible. Let's start with Mara. Mara and Riot are in the same space, and those are going to be because they're in the crypto space, and crypto at this point is doing a little movement. Okay, I see Nvidia, Mara, Google, Nvidia. Those are doing a little movement. Okay, so let's look here. First steps, we always want to look at charting our support and resistance. And Mara is just doing its thing. Right, I'm gonna go see where do we see a stop in anywhere in sight. Is there a stop in sight? Okay, so now we can go back here to April of 2022. And you see there's a bit of a gap right here. Let's put some lines on it. We want to chart support and resistance, and you want to chart a trend. You want to chart your trends. You want to chart support and resistance. This is always how we start. Y'all know. Y'all been with me enough. If you've been with me enough, you know that's how we get started. So this gap is a seller's gap from March of 2022, but it almost, if you look back over here, I'm not sure, this is probably looking real small for you all, especially if you're looking at your phone. The gap is almost completely filled by Friday's movement, and it actually closed above this gap. So now we need to look and see what's our next resistance, which would be this big red candle right here. From this date was April 5th, when it came up to here, top of 29.35, and then drop back down. I'm changing this to a solid line so we can see. Now that is actually above the current price. We probably could put another one right in here because this little green candle here was support in the middle, which was 27, which is almost where this candle here bumped up against and then turned back. Okay, 27.86, and this candle's high was 27.77. So about 13 cents higher was where it bumped right up in this resistance and it closed lower, right? Just let you know that that it was some resistance here. So when you're looking at support and resistance, now we need to look for some support. Let's go back over here so now we can see what happened in here. If we're looking back in the area of these supports, again, you got it. This is kind of small, and it's because I got to go back into 2022 in order to find some zones that were previously used in this area, because Mara hadn't been up here in a minute. There's a gap here that we need to investigate. So let's make it bigger again. This is part of the technical analysis that we start to do. This is what we do here. You start with support and resistance. You're checking out some trends, and you can look here and see that Mara went down here and then decided it was ready to rock, and it's been rocking ever since. It's just going on because it's, functioning in the crypto space, and crypto has been moving. So with that being said, Mara's, it's one of the, well, I guess like surrounding players. Mara in itself is not crypto, but it's one of the, supporting cast. It's one of the supporting cast. Okay. This was a gap here. Buyer's gap. There's buyers that got skipped over here between December the 18th and December the 19th. Some buyers got skipped. Right. Okay. So actually this one here has a little bit of one from here too. We got some overlapping gaps up here. This was one from way back in 2022, but now this candle here filled part of it, but not all of it. So I'm actually going to move this one up here, and we probably can get rid of this top one, right? If we're looking for a trend line, trend lines can be drawn lots of different ways, but you pick, a low point and you want it to touch as many candles as it can. This would be a trend line. That could be one. You could also draw from here and go straight up with these lines, and you can draw your trend lines till you blue in the face. All right. So I don't want anybody to overthink that you have to have all of these things, but you do want to have, Tyrell from Japan. Hi there. I've been to Japan. I lived in China for 3 years, and then we went to visit Japan while we were over there. I liked it there. I really did. So anyway, you could draw a lot of trend lines. Don't get caught up on the trend lines. You want to be, you want to have an idea of the trend, which we see that the trend is definitely going up. You got some support and resistance. These gaps matter because gaps provide support and resistance as well. All right. So if we were looking at what would we do for Mara, I personally would probably continue with put credit spreads because the chances of it going up are a little bit higher than it going down. Right. I'm not, and with a call credit spread or put credit spread, you want it to go up or at least stay up. Put credit spread, you want it to go down or at least stay down below. Now we see two resistance areas up here. So we're going to put, if you're going to put a call credit spread, it needs to be up here above 29. A call credit spread above 29. If you're going to do one, you need to do it up above these two. But see, I'm not one for getting in front of a moving train. So if you see that this is a hard pushing train going up, then save yourselves, and let's just do a put credit spread, maybe underneath. Put credit spreads, maybe under 24. if you're really feeling, like that's a little closer than you want to be because current price is 26, that's a little closer than you'd want to be for 3 or 4 days, then you're free to drop down into 20. The only problem with down here in the 20s, it's probably not going to have much premiums down here, but there's something, it's stopped in here some way. So I'm going to turn this to a line chart so we can see. If you see right here where it goes and goes to the side and stands up, this is right here in this zone right here. Let you know that this is a resting place, which means it's also a support. Nope, I don't want a trend line. I actually want a horizontal line. So you can put one right in here. When I say in here, that's about the 22. You may be able to use like 22 as your support area. I'm turning it back to candles so you can see, we can see what's there. Right at the bottom of this red candle could be your support. PCS under 24. Come on, let me type. Or under 22. Whichever one you're more comfortable with. 24 is going to get you better premiums. 22 may make you feel a little safer. But because price is going up, it's, if you want to be a couple of supports below. When I say under 24, that means your sale leg. When I'm mentioning these numbers, these are the sale leg numbers. So above CCS, above 29, which will be maybe 29.30 or 30.31. PCS under 24 would be like 23.24 or 21.22. The number I'm calling is the sale leg number. Okay. That's what we got on Mara. Let's go check Riley. I think Riley, though, somebody who's looking at an option chain, I think they only do monthly options, and I don't generally do monthlies. I personally want to do weeklies. So that means if you enter Riley, and I think it's a monthly. If it's a monthly, that means it's not going to expire to the middle of January. And I don't really like to go over 2 weeks for my credit spreads. That's just a personal preference. Speaking of which, let me go ahead and make this real clear. I'm not a financial advisor. I'm not telling anybody to do anything with their money. All I'm doing is talking, and I'm glad to have y'all here to listen. And we're looking at some stuff, but I'm not a financial advisor. So everybody, you are the CEO of your own portfolio. You are the master of this ship. All right. So if I'm looking at Riley, though, I see support. What list did I have Riley on? I had Riley on the, let me bring this down a little bigger. Boop, 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 boop. I had Riley on the call credit spread list. Probably because all these are kind of red, but they're kind of, it might be kind of iron condorish. You notice how all 5, 6, 7 of these candles are all in the same zone? It might be ready to do iron condors. All right. So here we are. If we were going to go, we've got this up here, 25 above there. If you want to be a little bit tighter, get a little tighter. This is Riley. You got all 3, 4, 5, 6, 7, 8, 9 candles are all in between this window. Now, these are all bumping down against the bottom of the support. So if you wanted something that you want to be a little more secure down here, maybe put another support underneath 18. But you can get, if you want to get outside of both these range, you could, basically look at all this, all these times. This is all the way back till from November the 13th. It's been in this zone since November the 13th. I don't know what the premiums look like or what the expirations are, but I would do a call credit spread above 26 and say at or above 26 if you wanted to get outside the zone. And I would look to do, if I was going to go out, go out wide. If you're going to go out wide and you don't see premiums, what you need to do, if you really want to be out wide, you got to go out another week in time. If it's weeks, if it's not weeks, you just, you may be able to find what you're looking for, because the middle of January is like 3 weeks away. So you might find decent premiums there at PCS at 18 or below. Oh, it's weeklies for Riley. Okay, thank you, Miss Deborah. And thank you, Miss Cat. I appreciate that. So if it's weekly, you can either go out further if you'd like. If you're feeling froggy, you can do a CCS at 24 or above, because that would bring you in a little bit closer based on what it's done, based on what it's done just in these last 9 days. And you could do a put credit spread. Nope. Nope. I didn't want you there. I wanted this. There we go. I need text. There we go. And then we could do a put credit spread at or below. What's that? 20? If you want to get a little closer, you can go 20 to 24. You might want to look at what is the plus minus number for the week. Miss Cat or Miss Deborah, tell me what's the plus minus number for the 29th. Because if it's that's going to put you in a little bit tighter. You're probably going to get decent premiums on this put credit spread because of how close these are. I probably would, if I was trading this and I was looking at a call credit spread, I would probably get in the 24. And I probably would wait on the put credit spread to see what it did after a couple of days. It looks like it may try. It did bump through here one time. It just couldn't close under here. All these others hadn't been able, but because something bumps up against it enough times, it'll finally push through. 3.5. So that means 3.5 below here. That puts us in the, I probably would be more comfortable at the 18 or below. On the put credit spread side, I probably would do the call credit spread side first, just because you see several more red candles. And if we looked at the trend here, this trend is more, if you're showing from, here and going down, the trend at this point is a downwards trend, right? It has been iron condor. So you may really be able to iron condor, because if you really, to graph it properly, look at the trend, we could really show it doing this, which means it's closing in and it's going to have to bump out one direction or the other. Y'all see how this comes down into this like descending wedge or something, depending on, if you're into the namings of these conventions. Let me find, I need to make this a little bit bigger. There we go. Let's go up here so I can see. But see how this is a descending. This is a little harder descending, but this is rising. So it's kind of closing. And then when it gets to the end of the flag, it's got to go where or the other. So it may be good to see which way we go, right? Might bump back, might go up, might go down. Okay. That Riley, I'm not sure what kind of premiums they got. It might be worth a watch, right? Might be worth a watch. All righty. So we looked at Riley. We looked at, not a firm. What do we look at? Mara. Y'all check para to see if it is a weekly expiration. This one has support here, right at the $15 mark, which is pretty much right where it is right now. And this is para, which is, what's the name of this? Who are these people? Paramount. This is Paramount, the movie people, right? Isn't Paramount the movie folks? And then you've got a downwards trend going from here. Touched it 3 times. Boom, boom, boom. Triple bottom. If you are looking at candle patterns, which we do look at these things. These are a lot of different things you gotta look at. I don't want you to analyze things so much so that you don't make a decision, but you take all the information pieces in that help you make a decision. Right? You take all the information pieces in that will help you decide what it is you want to do. Let me see. I can't see your comments yet. So if you're making comments in the thing, I can't see them yet. I'm on a different screen. Oh, I can't see them. Take that back. I can't see them on the other screen down here. Para is weekly. Okay, cool. Para is weekly. This is a buyer gap here. Come on, give me some. This is a buyer's gap. No, Lord, help. There we go. That's a buyer's gap here. So they might be trying to come down, and because gaps don't like to be left alone. They like to be, closed up. All righty. So what was Para? Para was on the put credit spread list. Para's not on here at all. Oh, there it is. Duh. Call credit spread list. Yes, because we got movement coming down. Let's see, what would be our resistance? We're here. Resistance, there's another gap here. There's a gap between 1520. There's a gap between 1520 and 1550. There's a seller's gap here. Let's write us a little note in here. There's a seller's gap, which means there's sellers waiting in this gap. How do we know the difference between a buyer's gap and a seller's gap? Seller's gap, it drops down, it gaps down, and a buyer's gap means it gaps up. The buyers, where there was more buyers, it jumped us up between, and there was more sellers, so it jumped it down. Can you jump it down? Can you? Anyway, this is a seller's gap. And this seller's gap will provide, the top of this gap will be resistance. There's probably some resistance in the middle too, but you can always count the top of it as resistance. And then we've got this harder resistance line up here in the 16s. So if I was going to look, there's also another gap up here. If I was going to look for a call credit spread on Para. Now, what I haven't done, I'm just calling out. I'm just not really calling out. Let me fix that. I'm just saying numbers based on what I see on the chart. What I haven't looked at is what is on the option chain, because for me, when I'm deciding what strikes to pick, I use the chart to help me look at support and resistance numbers. And I use the option chain to help me with the probability out of the money. I don't have Thinkorswim open right now, so I can't see them for myself, but I look at the probability out of the money. I generally want to pick a probability out of the money of 75% or higher. For me, many people are more comfortable with 80%. 80% probability out of the money means there's an 80% chance of success for your trade and a 20% chance of it not being successful. But I like those odds. 80% chance of success. Those are pretty good odds. Pretty good odds. Okay. So let's go. We've got up here. If I was going to look here, again, I'm only looking based on the chart. I'm not looking at the probability out of the money, which I do look at when I'm deciding. Call credit spread at or above. Come on. At or above. What's this? 1650? It's probably got a 16.5 because it's a $15 stock. It's probably a 50-cent spread. CCS at or above 16.5. Something above this 16.2. You actually could probably be, if you were feeling a little more, risky, you probably could go with 15.5. You probably could go at the top of this gap. But remember, you're going for 3 or 4 days. Volume being low means it's probably going to, it may move, may not. You just got to, volume makes things act kind of wonky. I probably would do, though, a call credit spread before I did a put credit spread, because you don't see what's going to happen here. We don't know what's going to happen there. You could also do a call credit spread at or above 15.5. Probably somewhere between 15.5, 16, 16.5 would be a good place. Somewhere up here if you're going to do a call credit spread. It's kind of the way I would work that. NVIDIA. Okay, Adrian, I see you, baby. Adrian is like, do not forget NVIDIA. I got you, girlfriend. I got you. Okay, let's go look at NVIDIA. NVDA. I need this to get smaller. There we go. Let's run a banner along the bottom. Show the ticker. There we go. NVIDIA. That's where we're going next. All right, what is going on? There we are. Comments. All righty, NVIDIA. Let's look here. Now, NVIDIA, you notice here, has not been able, it's tried a couple times to push up above that 500. It was not successful, but 500 here, let me change that to a solid line. 504 there. We also have another 500 is where it goes. Now we're looking, if we're looking, thinking about a trend, right? If you want to do a couple trend lines, I see a couple trend lines. We can pick the top of this one here, and it runs to that green one right there, shows you a bit of a downward trend. That's over the course of November to now. You can also put another trend line just from the past 4 or 5 days. That's also another trend. That's a shorter term trend line. You got lower highs, as they call it, lower highs. But you also have, we want to also not neglect the bottom trend that's going. Right? If you wanted to go from, you could actually start from down here and swing it from here, swing it through this green one, which is almost the same place, almost the same trend. There you go. Rising, falling. It's just this one's falling a little bit slower. If you do the one from November going, got those. Let's look at supports. That Wednesday dropped straight down into 480.98, right into the 480. You can tell even back here, this was some resistance support area back here because these candles kind of bopped in the same area. Then you have it. So we've got that as a support, 480. If you want to get a little more defined, you actually can put another line in here with Thursday and Friday. That's 488. Right, the gap, there was a gap between December the 15th and Monday the 18th that got filled by Wednesday. Wednesday's movement filled this gap that was from that over the weekend gap. Now, I don't know if y'all saw the stuff that Nancy Pelosi supposedly just spent, well, the other day, spent $5 million. I don't know if it was the other day, because I think they have a period of time before they have to report what buys they've made. She may have bought $5 million worth of NVIDIA 2 weeks ago, 3 weeks ago. I don't know. I mean, I don't know if the article said exactly when she purchased it, but Nancy Pelosi spent $5 million on NVIDIA stock. Perhaps she knows something. Don't know what her know, but she could have bought it down here when they started these movements, because they do have a period of time. Somebody on the chat, if you know, I think the political people have a period of time that they have before they have to tell you. Maybe somebody can tell me in the chat how much time they have before they have to report it. You don't know when she bought it, but we do know that she did spend $5 million. But the news has hit. So now that the news is out, many times, what did it say? Buy the rumor, sell the news, or something like that. I think that's the way it goes. But now that she's given us the news, maybe people will go in and buy some more. So NVIDIA may move some more. If I was looking though, we've had an upward trend, but over the last 4 or 5 days, we've had a downward trend. So if I was checking out NVIDIA, she's in 120 call, and it was recently deep in the money, which what she'll do too is what she's done in the past is she's bought stuff deep in the money, and then when she's ready to exercise it, she'll exercise for her shares. Instead of taking the money off the table, she'll take the shares off. So yeah. Here we go. So what would you do if I was looking at this? I probably would do, again, I haven't looked at probability out of the money, but if I was going to do a call credit spread, I'd want to get above 505. Now, you definitely would want somebody tell me what is the plus minus number for NVIDIA. because I would also want to add that plus minus number to the current price. Wait to see how the market opens on Monday. Now, what we do on Tuesday, just in case you didn't know, everybody who wasn't paying attention, pay attention, pay attention, pay attention. Listen, 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 listen. As a seller, we don't run into the market at 9:30. No, ma'am, no, sir. We do not need that volatility. No, no, no. We give Monday, Tuesday morning, whichever the opening of the market, we give that a little time to settle down. Because all the orders from the weekend that people who are doing their weekend studying, like we're doing, people decide they're going to put in orders first thing in the morning on Monday or Tuesday, or they might have put those orders in over the weekend and they're just waiting for them to pick up. So them first 10, 15, 20 minutes is orders that are coming in from all over the weekend. And no, we don't jump into the fray. Give it a minute. Give it some time. As sellers, like I said, we've got time. We've got time on our hands. So we can wait and get into something, later in the day or later that day, the next day. We don't have to get in on our selling trades right off rip. No, no, no. We're going to do a put credit spread. If I was doing a put credit spread, 15 is the plus minus number. Thank you, Miss Deborah. So put credit spread, I definitely go at or below 480, which maybe not. Let me see. We closed at 480. I wouldn't even go that close probably. So with 488, if we were adding 15 to that, adding 15, that takes us into what? 503? Yeah, 503, 505. This might not be a bad move up here. Only because at this point it's shown that it's not bumping past a 5. Don't mean that a good momentum won't push it. So I maybe 505 or 510, something like that. But we're at 488. So we're about, 15 points away from there right now. And then, right, 15-ish is over 15 points away from right now. So I would, and I would subtract from the 488, I would subtract that 15, which puts us at what, 473? Let me see. 475, 470 or 475, 472.5 might be safer because at this point, we don't really know whether or not there's some more red coming in some more red coming, but we do see strong support right here at 480. We see that there. So if you below that, getting some decent premiums. Remember, when you're looking for premiums, you're looking for about 25%. Looking for about 25% in premiums. Okay, not investment advice. Not investment advice. Okay, I want you all to always err on the side of safety and your comfort. All right, I have a trading quiz. I have a trading quiz. It's at Trading Strategy TEGY4U.com. TradingStrategyForYou.com basically is a way for you to look and see what is your trading style, what is your trading comfort level, what is the best strategy for you, because everybody is not the same trader. Everybody's not the same. I was trying to see it here. Oh, there it is. Everybody's not the same trader, right? So some people are more aggressive than others. Some people are more passive and conservative. You need to figure out which trading strategy suits you best. So that way you can operate in your strong place. Remember I was talking about earlier about being in my strong place. I bought a couple calls last week that turned out to not work out. I should have stayed with selling. The selling is my strong place. I realize that. So you have to know what is your strong place and function therein. Function therein. Stay in your strong place. Trading strategy for you basically will help you to determine what's a good strategy for you that fits your life, fits your circumstance, fits your comfort level of trading, and you roll with that. Okay, roll in with that. All righty. Okay, so we looked at NVIDIA. I think I didn't have Starbucks on the list, but I did see that cat asked for it. Let me see if there's any more, because this may be our last one. Let me see. And then we'll go. I want to talk about how do we finish strong. We talked about Riley, Para, Starbucks, NVIDIA. Oh, we didn't look at Google. And we looked at Mara. We'll do Starbucks and Google. Starbucks wasn't on the list, but let's see what kind of stuff we got going over here. Starbucks. Boom, 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 boom. Ba-da-bam, ba-da-bam. Okay. Here we are. Support and resistance. There's a gap here, a large gap here. Did we look at Starbucks? Yeah, I think we did. We looked at Starbucks the other day, I believe. Didn't we, Kat? I think we were talking about it in the chat, maybe Thursday or Friday. I think it might have been Friday when we were starting to think about what we were going to do for a subsequent week. What are we going to do? Also, so this red is the gap. Actually, the gap was from 91 all the way up to 99, and this happened. See, I'm looking at TradingView, and on TradingView they tell you like when was earnings and when this stuff. I forgot what D stands for. No, dividend, when they give out their dividend money. But on the earnings, they jumped up a lot on their earnings. This was back in November, right? And then it went up, and then it came on back down. It's filling that gap. It hasn't finished filling the entire gap, though there's still some left. But in the midst of this, we can now see that there's some resistance and support areas inside of the gap. Horizontal line. And there's one here. Nope, I want it to be solid. Solid. Solid as a rock. I want it to be solid. There's a few little gaps in here too. I see this was support resistance based on a couple stops here. That's at 92. So if I was going to do Starbucks, y'all tell me in the chat. If you were looking at my chart and you were looking at this, what would you do? Would you do a call credit spread or a put credit spread? What would be your thoughts on Starbucks? What would be your thoughts? Would you do a put credit spread? Would you do a call credit spread? What do you think? Na, 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 na. I'm doing the Jeopardy music. That's not Jeopardy. It is. Come on, I'm waiting for somebody to answer. Nobody's answering. There we go. Put what? Trading. I think I you do a put what, Kat? Tradingstrategy4u.com. Make sure I spell it right. You do a put credit spread or a call credit spread? I'm waiting for some more comments. I don't see them. Are we that delayed? Are we delayed in the comment section? Are we delayed? There we go. I see a call credit spread by Tyrell. Yes. Put credit. And Kat said put. I'm just wondering if you want to say put. You're going to buy a put. You're going to do a put credit spread. I think you do credit spreads all too. Put credit spread. There we go. I could see the case being made for both. I could see the case being made for both of these. There we go, a dashed line, because I see a little bit of gap right up here. PCS gaps need to be filled. This is true. Call credit spread. I can see the case for both sides. I really do. We've got a trend line here. If we were going to draw a trend, Starbucks has been on a downwards trend. If you want to go with trend lines, it's been on a downward trend. It's been trending downward. But even though that's been the case, it's also seemed like it bumped against this support, and it went up for the next 2 days. So you may be able to do a put credit spread underneath here. Now you're gonna have to get to be really comfortable. I'd want to get underneath these two for sure. And if possible, maybe even under 91. I don't know if that's possible. That's 94. Somebody tell me, Miss Deborah, will you tell me the plus minus number for Starbucks for Friday? Plus minus number for Starbucks for the 29th. So if I was going to do a put credit spread, PCS, I would think at or below. If I was feeling real conservative, I would look at 91. But that's really more conservative than I probably would be, because if I was looking at it, it's probably there's the premiums down here may not be what I'd want them to be. But if it's a plus minus 4, then that would put you in this area. Put credit spread at 91 or below. And if I was going to do a call credit spread, thank you. If I was going to do a call credit spread, come on, help me out, machine. There we go. I would do a call credit spread at 97 or above. Oh, type with the letters that are in front of you. There we go. 1.95. Okay, Starbucks doesn't move very much. For it to be $90-something, it doesn't move very much. So 1.9 would be like a 2. So going down 2 would put you at like 93, which puts you, 93 would be in here. So you probably could get below. Oh, okay. Is that what he said, or you're asking? Oh, okay. Would be like 90, 92, 93, 92, somewhere in there. And then if you're going upwards, you're going to go up to, you're going to be at 97, like I said, 97 or above. Okay, so we could also do a put credit spread in the, if you were feeling, a little more froggy, at 93 or below. You're probably going to get better money from the put credit spread. Why is that? Because price is closer to it. Price is closer to it. But you also see that you've got a little bit of a downward trend going right here. Got a little bit of a downward trend, right? So anytime when the price is coming towards you, then you're going to get better premiums. But that can be a little scarier because price is coming towards your strikes. Where you want to make sure that you're safer, or at least beyond at least a support or two. You always want to do that. Okay. Last but not least, Google. Yep, you were right, Makai. Okay. Come on, support. So before we seen that, Google had been in this kind of like support resistance area, like a consolidation zone for a while, but it bumped out of there. It bumped out of here because the last, let me get a solid line here. 141, but it bumped over that on Friday. Several gaps. Yeah, just jumping. And do I have the right Google? They got a lot of gaps happening here. Jump up, jump around. So now we're kind of going upwards. We've got kind of an upwards trend going. So let's see. If we were going from here, we could go this way. Shows what we got going. If you want to do a smaller trend line, you've got this area here. This is now a higher. It's slight, but this is a higher high than it was. Looking from this height to this one. Again, it's slight, but it is still higher. All right. So we might still be trending upwards for just a bit. What do you think? Put credit spread, call credit spread. Could we comfortably do both? It's not going up hard and fast. So call credit spread may not be bad. Google is plus minus 3.3. Yep. So if I went to, maybe you went from like 1 to 145, that puts you above the 141 up here. And if you went down to 3, you went down to 1. See, there's so many gaps in here. These gaps are gonna provide some support for you if you're interested in trading. Good thing about Google is it is a one spread. Google's a one spread. Those who are in the credit spread challenge, we're looking at one spread stocks. And the reason we looked at one spreads is because we wanted to make sure that you could kind of get yourself comfortable with credit spreads and only use $100. Wanted everybody to be able to comfortably participate in the challenge using $100 of collateral. And when you felt more comfortable, which people have so far, when you feel more comfortable, then you start to run more trades. As I showed y'all last week, you could take $500, pick 5 different stocks, do credit spreads on each of them, take in $10 to $15 per. I went through the whole exercise and showed you how in a 6 weeks window, you can double your $500. In about 6 weeks, using $500, you can 6 weeks of trades can double that. Of course, if you're using more money, then the process runs faster. But I wanted to show that it really doesn't take a lot of money to sell or to start to generate, and you can generate resources and steady revenue profits in a safe way. Yes, it can get scary like it did last Wednesday when the bottom fell out, but we're able to just wait for the recovery to happen between Thursday and Friday, and we were still able to get our money. Tyrell said, I'm starting to sound bearish. Well, some stuff is still bearish. We see what we see. Some stuff is still bearish. I do like that Google, is a one spread, even though it's $100 and something stock, which means it provides decent premiums. It'll provide decent premiums. I want to turn this into a dotted line. So if I was looking at, there's a lot of gaps on here you'd have to contend yourself with for those who are charting. Okay, let me share something with you before I go into the 3 things, and I can start it here. What I'm going to do first of the year, actually the first Saturday in January, I'm starting it. I'm going to do a 4-week boot camp, a 4-week charting boot camp. Come on, I'm trying to type it. I'm going to call it a technical analysis boot camp because it won't only be charting. Technical analysis boot camp. And I'm calling it a boot camp because we're going to do it for 4 weeks. We're going to do each Saturday, probably around 11 a.m. I'm still fleshing out all the details, but that's what we're going to have, a 4-week technical analysis boot camp each Saturday in January. We're going to start it. What's the first Saturday in January? Let me see what my calendar has to say. See what my trusty calendar says about January for the merch. January the 6th. We're going to start on January the 6th. And we're going to do January 6th through 4 weeks would be 6 and 7. That would be 14, 20. Oh, look at the calendar. It's right here. It's right here. Is that the 6th? Oh, I'm looking at the wrong dates. The 6th going through 1, 2, 3, 4, the 27th through January 27th. I'm going to cover the stuff I'm going to cover the basics of charting. I'm going to cover, I hit enter. I shouldn't have hit enter. I'm going to cover candlestick patterns. We're going to cover support and resistance. We're going to cover trends, trend lines. We're going to cover indicators, the best indicators for what you're doing. We're going to cover time frames, the best time frames to use for trades. And then we're going to do charting or technical analysis for your specific strategy. That's what I'm going to do in January. I'm going to offer that in January. Look forward to that coming. I'll talk more about it soon. It's not going to be free, but I'll make sure that it's reasonable and valuable. That's the whole point. Y'all know, y'all been with me enough to see. And if you haven't, hopefully you will continue to ride. You'll know that I provide value. So that's going to be coming up in January. We're going to start with the chart. We're starting off 2024. I almost said 2024. We're starting off 2024 and getting this right, because I see people, and for a long time it was even me. I learned how to chart when I first started trading. I learned how to chart, and I would do it. I knew how, and then once I got comfortable and got a little better, I quit charting regularly. I was like, oh yeah, I can see that, and then then you look up and things aren't going the way you want them to go, and you're like, well, how about we go back to the chart? I don't personally use a lot of indicators. I do see where some of them are useful, and I'll teach you. I will talk about and show you how do we use those indicators to our best use. I do find sometimes people got way too many indicators on their charts. You got 4 and 5 and 15 indicators, and they're giving you mixed signals. These are giving you mixed signals, especially when you change the time frame. One indicator may work really good on a certain time frame. You change the time frame, that indicator doesn't give you the same alerts. You need to have you got to get all the pieces to go together, and we'll just be picking and doing. So what we'll do is we'll break it out into weeks. That way it won't overwhelm you at one time. I did a charting workshop on November the 18th. It was great. It was like 3 hours. We covered a lot of information. It was like 3.5 hours. We covered a lot of really good information, but and there was stuff that we didn't get to. I didn't cover. I meant for that to be a basic, charting thing, and it was a workshop. With this, we'll start with the basics and we'll build on it, and then we'll get up to where we're a little more, involved and engaged. But it will take ourselves 4 weeks, so we won't feel like we're rushing through it, and I won't feel like I'm under the gun for 3 and 4 hours of time, because people's attention span ain't there, including mine. I'm people. People's attention span ain't there, including my attention span ain't there. Okay, so look for more information about that coming. Alrighty, that's going to be coming up in January. So if that's something you want to do, definitely keep looking out for it. I promise you it's going to be useful and helpful. It's going to set you off on the right course in the first month of the year. Because listen, we about getting this money. Y'all know my motto in our community is stay green and get this money. But part of what needs to be gotten is some charting and some technical analysis abilities. We all need that. When I say we all, I never exclude myself in what I'm talking about. Because if I'm talking to you about it, generally it's because it hits me too. Though my feet fit those limbs also. All right. So let's talk about 3 ways to finish strong. The first way you can finish strong is you're going to need to revisit. Let me see, it'll be a quick banner real quick. 1, revisit your trading plan. Okay, we added it. There we go. Let's show it. The first one, you're going to revisit your trading plan. Okay, so I already know that there are people who are watching who going to say, trading plan, I don't have one of those. And I know you may not have one. Or if you do have one, you used it maybe a while ago. You need to go and dust it off. Go and dust off your trading plan. If you don't have a trading plan with no clue, then go check on my YouTube channel. I have a video on my YouTube channel about, let me see if I can find it real quick, a video about creating a trading plan. Let's see if I can find it real fast. But you're going to want to revisit your trading plan. All right, that's how we're going to finish strong. Revisit and take a look at your trading plan to see, what did it say? Did you stick to it? If you didn't stick to it, why not? And do you need to update it? You might need to update it, and this is the one thing that we realized when we were going through and creating this video that I'm getting ready to give you the link to. One of the things we found out was that their trading plans are also, let me put this in the thing. I found the link. Trading plans are also create, a trading plan video. They're also for your specific trading strategy. So like even as a seller, we trade and sell covered calls, cash secure puts, put credit spreads, and call credit spreads. For the most part, those are the four things we primarily do. If you're trading covered calls, you're going to have a few little different nuances than if you're doing even call credit spreads. If you're selling puts, you're going to have some nuance changes for put credit spreads. This is two things you're going to do different. If you're selling puts, you are looking for the place where the price won't come down to. And same thing you want with put credit spreads. But if you're selling puts, you also are knowing that you don't have to watch that one as much, because if it comes into your strike, you've got the money set there. You're going to acquire 100 shares. If you're trading put credit spreads and it comes into your strike, you're not going to get the shares. You're going to lose the money. So that you got to have maybe a little different nuance as to how you manage a put credit spread versus selling a put. It's going to be a little different. When do you enter and when do you exit? That exit is a piece of trading plans. Is when do you exit? Some of us got strategies for when we enter, but don't have one for when we exit. We just like, well, I'm just gonna hang out in here. What am I gonna do? You need to have a plan for how you're gonna get out. If your trade is breached by how much? What's the financial place that you're going? Are you getting out based on a delta, based on proximity to your strike, based on the money? What is the plan? You need a plan. That's why it's called a trading plan. First thing, we're going to revisit our trading plan. That's our way we're going to finish strong. Okay. The second thing we're going to do is, well, let me go back. I'm going to we're going to make us a new one. Second thing we're going to do is revisit this year's profits, losses. Profits and losses. Add the banner. We're going to put it up. There we go. Revisit this year's profits and losses. You will inevitably see that there are certain strategies you're better at or that have worked better for you. Strategies that have worked better and stocks that have worked better. I've had I do credit spreads on a lot of different stuff, and some stocks just don't do credit spreads as well as others. We had somebody in our community who was like, well, they like the sector ETFs, but they're like, the sector ETFs haven't worked out for them. They can do credit spreads on other stuff with no problem, but sector ETFs hasn't worked out quite the same way. And actually, I did some sector ETFs a couple weeks ago, and it didn't go my way either. And I was like, well, this is good. But next year, sector ETFs is on our hit list. The XLs, XLF, XLP, XLK, XLQ, XLI, XLRE, XL, all of them, E, F, G, all of those actually have one. I'm trying to be funny, but they do all have them. So anyway, we're going to do the XLs next year because you're trading credit spreads on ETFs reduces the volatility. So you're reducing your volatility some, so you don't have to, you're not submitted to or at the mercy of the whim of an NVIDIA or at the whim of an Amazon or a Google or an Apple or whatever else. If you get into a sector ETF, like I say XLP, XLK, XLQ, XLE, XLF, any of those, finance, you get into some of those, you're not going to, there's a bunch of different things in there. So a stock may move it, but it's not going to move as violently as the stock all by itself. So you want to revisit this year's profits and losses. What has been your bread and butter? What has been that's paid you comfortably? What stock has paid you comfortably? What stock has not paid you comfortably? What strategy has paid you? What strategy has not? Buying has not. I stopped buying options a while back for all the reasons I've mentioned multiple times. Buying doesn't always work out for me. Selling, that's my strong place. Selling is, I'm more comfortable there. So you're going to revisit your year's profits and losses and determine what were the best places. Okay. And banner number 3, this one's going to be a little more introspective, I think. Okay, this is number 3. Number 3 is we are going to forgive ourselves. And the reason I'm going to say that we're going to forgive ourselves, if you're not paying attention, tune in. We're wrapping up. We're going to forgive ourselves and vow to learn what we need for next year. Too many times we, and I'm putting me in the category, have just entered trades willy-nilly based on FOMO, fear of missing out. Everybody talking about so-and-so running, let me go get a trade. And by the time you jump on it, the train is pulled into the station. But you still holding on. They don't put all these people done made all their money, and you hop on the train thinking we finna ride out, and they already done their riding. So we jumped into trades because of fear of missing out. We stayed in trades too long based on greed, thinking it's gonna keep going. Or you stayed in there like it's gonna come back. Trade gone. Okay, money gone. And you're like, it's gonna come back. And sometimes they do, but most times they don't. And you just hung out and lingered. Right? We're gonna forgive ourselves for all the stuff that happened in 2023 because it's wrapping up. We're gonna check our trading plan. We're going to look back at our profits and losses, accurately and see what the deal is. And then we're going to say, okay, next year, I'm vowing that I will learn what I need to learn. And I will lean in the areas where I will tune up my trading plan. I will tighten up and tune up my trading plan to where I am only entering and exiting trades when I've got good setups. I will exit trades when they need to be exited. I'm not hanging around lingering, holding on to bad math or holding on to bad groceries. We're not holding on to bad decisions. And in 2024, we're letting it go. Let it go. Let it go. We're letting the bad decisions go. We're holding on to winners. Let's let our winners run. Because sometimes we'll jump out of our winners so fast and let the losers hang on with praying that it's going to come back. And our winners would have superseded those if we just had held on to them. Right? We're going to say, okay, what are my profits and losses? If I know that a particular stock or particular strategy works better for me, I'm going to lean into that strategy. That's what we're doing 2024. We're not trading for trading's sake. We're trading for money. We're trading for profits. So if there's a stock or a strategy that's not paying you, we're divorcing that. Let's divorce it if it's not. So that's our third thing. We're going to forgive ourselves for 2023. It is behind us. This is beyond me now. It's behind me now. We're letting it go. Ooh, we're leaving it. Put the past in your behind, like the guy said on Lion King. I think that's what the line was. Yep. We're putting the past behind us. There we go. And we're going to vow to learn what we need to learn for next year. What do you need to learn to tighten up your stuff for next year? And we're going to learn it. Tamara said number 3 is tough, but it works. You got to learn to accept the loss due to choices based on greed. That has happened to me. Child, when I said we, I meant we. And this was not the French we. It was all of us, collective we. It included me too. Right? But 2024 is going to be different. It's going to be different for all of us. We're going to lean in. If you don't have a trading plan, let's get one. Okay. Watch that video, create you a trading plan. If you've not kept very good trading records on your trades this year, I've been guilty of that. I start off strong. Next thing I know, I'm just, popping in trades as I drive in the car. Who does this foolishness? Then don't write it down nowhere. Come time to figure out what to do at the end of it. Like, well, what made me do? What this don't fit none of my trading plan. What are you doing? I've now started this month. I vowed that I would write down every single trade, and I have done just that. I've written down every single trade, and it requires consistency and persistence. But you know what, though? It's kept me from going into some trades because I figure if I can't write it down, I'm not entering the trade. That's kept me from entering some stuff I should have not entered anyway. Right? It helps me with closing trades too. So check your profits and losses. And this is what we're going to look at. Tyrell, I already know. All of us guilty. I'm stepping on toes. Whether people say ouch or not. I already know. Because I know when it's prompted me, for me or for anybody, when it hits me, it hits my community, those who are under the sound of my voice. I know that. So you're gonna do your checking our profits and losses, seeing where our money went. You can look at your trade journals. Where did your money go? What did it do? Da, 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 da. If something's not working for you, we're letting it go. And then we're going to learn if you need to learn how to chart better, how to do better technical analysis, how to do that, then you're going to get ready to sign up. So that way we can start off January strong. We're starting off strong, right? We want to prepare ourselves to be successful and profitable at this long term. This isn't a short-term thing. I don't think it's a short-term thing for y'all. It's not short-term for me. It's not short-term for me. We've done this for years. Every single day, we're on calls every single day. We're on conversations every single day. Well, I'm on with my community, right? We're trading, we're talking, we're getting ready. We're looking at entries, looking at exits, right? That's what we're doing every single day. So I'm true to this. And I sure hope that you all are true to this as well. That's where we are. Okay, so the E2T membership is open. E2T membership is open, right? You can come hang out with us over there. Let me find the link. We have a morning call every morning at 9:30. We're on a morning call together at the market open. We hang out together. Now that is a call. We're on Zoom when we do that. Okay. We're on Zoom, interactive, doing all that. We stay on that call 30 to 45 minutes, depending on what's going on. We stay on about 45 minutes, cover with the market open, what's going on with that. Then we look at some trades and whatever we got to do in there. We have an exclusive Telegram that we hang out in together. Once a month, I do coaching on Saturdays, but I do coaching every Wednesday evening. It's really more like a training on Wednesday evenings. We train based on what's needed in the group. And then on the first Saturday of the month, I do coaching, and that's some topic that I determine that is suitable for our community, where we either are revisiting a strategy or we're leaning in on something more specific. But we pick that's based on the needs of the group as well, right? New strategies. We're trying to expand. Next year, we're going to expand into some more advanced strategies and working deeper in technical analysis. Those are on my hit list definitely for first quarter of 2024, because we need to get more technically sound to make sure we're able to enter and exit our trades based on knowledge, not based on a feeling, based on what we see. We're going to use candles, and we're going to use chart patterns. We're going to use all the things we can use, to help sure that we make good trading decisions. Okay, that's what we're doing. That's what we're doing in here. That's what we're doing in here. Y'all saw that we've got the strategies all at Educator2Trader.com. You can follow me there. Please be sure to like and subscribe to the channel if you've hung out here and enjoyed this time together. Sorry I was late, but I think we've covered a lot. We have been an hour and almost hour and a half. We've done a long time today. All right. Look for me to send out the graphic that includes the different stocks that I told you on the call credit spread and the put credit spread. I'll put that graphic out with some strikes, and then you can look for that. If you're not a part of my email list, you need to be a part of my email list, right? And the Facebook group. We've got an Educator to Trader Facebook group. The email group, if you go into that trading strategy for you, that's going to get you in any of those freebies that you saw that at the beginning of this, when I was scrolling at the bottom, any of those, you get a free resource, and that'll get you on my email list. You can always have access to it. So you got the membership, we've got the community, we've got the trainings, right? You just looking for me, find me in all the social places, Educator to Trader, and you can reach out to me. I generally talk back to the people. Y'all see, I'm just really down to earth. I'm always talking back to the people to see, what we need. How can we be of service? Because my objective is to help as many people as possible to get some of this money out the market, right? Merry Christmas. I appreciate that. Y'all press the like button for sure. Thank you, Miss Deborah. Press the like button. Merry Christmas to everyone. You all, I'm sure hopefully you're in for the night. Nobody's going out, or you're hanging out right now. Maybe you're out with your family or whatever. Enjoy Christmas with your family or your friends. However, if it's a sad time for you, we pray God's peace and his spirits to help comfort you in the tough times. The holidays can always be tough. If you've lost a loved one, the holidays are a tough time for that. I know my mom passed away about 2 or 3 years ago. She passed away as a result of COVID, and Christmas and Thanksgiving times are probably the hardest times of the year. I'm an only child, so I don't have siblings. So me and my children kind of just hang out together during these times but we usually would spend that time with my mom. So we have to manage, try to keep the balance. You don't want to be sad. You don't want to be too happy. It's kind of like you got to balance it. It has to be balanced. So enjoy. Please remember that Jesus truly is the reason for the season, even though this may or may not be his birthday. It is the time that we look at so we can all collectively honor his birthday. Wherever you stand spiritually, y'all know I'm a Christ follower, so I'm going that way. If anybody's offended, I do apologize. All right. In this community, we do two things. Boop, 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 boop. We stay green and we get this money. All right. I will see you all in all the places. From my heart to yours, Merry Christmas. Merry Christmas. We'll be going at it Tuesday morning. Everybody who's with the Credit Spread Challenge, we'll still be talking in the chat so we can get ourselves ready to run Tuesday. Enjoy Christmas. Try not to eat too much. Enjoy the desserts, though. Dessert is my favorite. Okay. See y'all later. Bye, everyone. Bye-bye, everybody.